Okay, can you hear me now?
Yes.
Sound
Yes, we can
okay,
hear.
good. Okay, so I'm gonna have to get my whole introduction over, but that's all right. Okay, so welcome to our Sunday school. If you slide over to the reference, right here. Welcome to our Sunday school, everybody in Telegram land. Today will be our free credit class and also private banking and whole life insurance class. We have a financial specialist that's here today to share her insight as my personal insurance broker on how we can break generational poverty by just understanding insurance, understanding private banking, understanding how to leave some down to the next generation, like right now, even though we might not be rich. This is like what I call credit, because it is a form of credit. Right, you pay into a policy and then you get a death benefit at the end. My death benefit right now is like what, 170K. So if I die today, my people get 170K today. You know, it's very important. It don't take 170K to bury me. You know, and I have a will, I have a trust set up for my burial and things like that. So we need to start to plan ahead and not just wait for things to happen. We need to be proactive and not reactive. So Latoya Jackson is a financial specialist. Our sisters came all the way from her location to share her wisdom with us. Oh, there she go. She's going to piece us. She has some phenomenal information to share with us. We will have let her speak, and then we will open up for questions after she speaks. So hold your questions, write them down. After she speak, I will present some additional things about credit already uploaded, but I'm not going to hold the floor. I'm going to let her have it. Latoya Jackson, thank you for coming. The floor is now yours. Peace and love.
Thank you so much. That was a beautiful opening. Hi, guys. My name is Latoya, and I'm so excited to be with you here today. I'm so excited to share with you. So I'm grateful for the opportunity. Yep, my name is Latoya Jackson, and the name of my company is LN Financial Resources. And we are looking to put $1 billion tax-free money back into our community. And so we specialize in income protection, debt elimination, tax-free retirement planning, wealth and legacy creation, to leave that legacy back with our families for generations. Because it's not always about how much money we make. It's about how much money we keep and for how many generations we keep it. That's what it's about. Because I have so many clients that may be doctors or lawyers that are making lots of money on paper, but they're in debt. So they really don't have anything. They're in debt up to their head because they don't really truly understand how money works. Or when you have someone that wins the lottery and then you come up on all of this money and then a year later they're broke. All of the money is gone. So it's not always about how much money we make. It's about how much money we keep and for how many generations we keep it. And so that's why I'm so excited to be here today to share with you guys. So we're going to talk about how money works. And so I start with taxes. The average American right now is paying over 40% of their money in taxes. Another 25% is going to debt. 25% of average American's income is going into debt. That's over 65% of money that you have coming in gone, right? Only 10% is going to savings and retirement and 25% to lifestyle. So we want to change that. We want to reduce those taxes. We want to eliminate that debt. We want to increase that savings and retirement and also increase the money that you're putting back into your pockets, into your lifestyle, and also leaving for your legacies. So that is why we are here today. So we're going to talk about it and talk about how money works. So basically, when you think about money, more so than anything, this is going to be a mindset shift. It's going to be basically saying, hey, let's recondition our minds and let's think differently about money than we've ever thought before. And I'll explain a little bit what I mean by that. When you go to school and all those things, they teach you a certain way. When you go to school, they teach you a certain way, and they say, okay, go to school. Then when you leave that, then you go to college. And then when you leave college, then you go get a job. And then you put your money into this government plan, the 401k. They teach you this system. And that system is really created to benefit the government more so than anything, because the government understands that we are $1 million entities. A lot of us don't understand that we are $1 million entities. When you think about the average American making $50,000 a year, in just 20 years, that's $1 million. If you think about it, average American may be making $40,000 a year. You know, in 25, 30, that's $1 million. Where is it? Where is it? The government understands that, right? So they want to make sure that they get every penny of it that they can get and get their hands on it. So they know the minute that we're born, they're trying to get as much of that $1 million that they can get. Some people are putting millions of dollars here. So they understand that. So we have to understand our entity and what we are and put that money back into our pockets, into our legacies and our generations. So I'll start with the banks. When we put our money inside of a bank, and especially inside of a savings account, that money doesn't just sit there inside of that bank waiting for us to come back to take it out and pick it up. The bank is giving that money lots of work to do immediately. They're reloaning that money back out at 15% interest, at 18% interest, at 20% interest. They're making tons of money off of our money. But if you go into, or if you think about your lifespan of using the bank, maybe you've used the bank 10 years, 15 years, 20 years, that bank has made tons of money off of you. Some people hundreds of thousands of dollars, some people millions of dollars. But if you go back into a bank today and say, hey, bank, can I just borrow $10,000? First, they're going to make you fill out an application. And then if you are approved, they're going to charge you a whole bunch of money just to give you back your own money that they've already made off of us 1,000,000 times over. So we say, wait a minute, there has to be a better way. And so with these vehicles, what it does is it allows us to be able to act like that small 1%, the wealthy, banks, and corporations. So when you think about people right now in America, there's 3 types of money people. You have the saver, you have the spender, and you have the wealth creator. The wealth creator is that small 1%. The rest of it is the saver and the spender. It's most of people. And so regardless of if you're the spender or if you're the saver, everybody is only using that dollar one time. You use it and it's gone, right? And then you got to resave it all over again. So everybody's coming back to that line of zero because we're only using that dollar once. So when you have the saver, they save. But then what happens? Water heater goes out. I need to buy a new car. Something's going to happen. And you got to go in that savings account back down to that line of zero. So then you got to save all over again. Then something else is going to happen. And so you got to go back into that line of zero. So we're never getting out of that rat race. And with the spender, they get the paycheck, spend, all the way to that line of zero. So the next paycheck, spend. So it doesn't matter which end of the spectrum we're on. Everybody's still coming back to that line of zero, never being able to truly get ahead. So when you think about that small 1%, the banks, corporations, the wealthy, they've figured out how to remove that line of zero and continue to make those dollars work for them multiple ways, multiple times, and it never stops moving. So with that, we compare these vehicles directly to a bank or directly to a savings account. So you're going to be given that dollar more than one job to do. So when we think about these vehicles, it's just like a savings account. So we use it the same way. When you think about how you use a savings account, we use it for about 3 reasons. We use it for emergency purposes. We use it for asset purchases, the purchase of a home or a car, things of that sort. But we also use it for investment opportunities to make that money make more money for us. So we are going to use these vehicles the exact same way. And I'm going to tell you why you want to use these vehicles to go out and do the work for you, as opposed to pulling it out of that savings account and going back to that line of zero. So let's just say you've systematically saved $10,000 into your savings account. And let's just say there's an investment opportunity out there where you want to do some other things and make that money, make more money for you. Maybe it's just $2,000 that you need to take out. When you go into your savings account and you take out that $2,000, Now that $10,000 balance decreases down to $8,000, back to that line of zero. So now you got your $2,000 to go and invest in the market. And you got to hope that investment does well, just so you can get that money back in there, just to be back where you were, and hope you can get back past it. So when these new vehicles, new savings account, it's the same thing. But what you're going to do, you can have that same $10,000 in there. But what you're going to do is use your $10,000 as collateral to access other people's money while your money remains in an account earning uninterrupted compounding interest. So your money is continuing to work for you, and it never stops working for you, even when you're using it to do other things. So you're going to use other people's money to go and do the work like the banks do, right? The banks have their money in money. Wealthy people put their money in money. They let other people's money go out and do the work to make even more money, just like when we put our money in a bank. So now that's the whole system. It removes that line of zero. So now your money is going to keep growing. So if you go into that account, take out that $2,000, your $10,000 does not decrease. That balance does not go down to $8,000 like it does in your savings account. That your $10,000 continues to grow and earn interest at $10,000, $11,000, $12,000. So your money is growing like nothing ever happened. But now you still have your $2,000 to go out and invest in the market. So if the market does well, great. Your money's still growing and like it was never touched. Now you can go ahead and put that money back into that vehicle, which is going to further expand your borrowing power to be able to do it all over again on an even higher level the next time and higher level the next time, because everything's growing on both sides. And then you also have your money that you made from the profit of the investment. So this is how you are now going to be able to give that dollar multiple jobs to do at one time. And you're never going to lose the forward growth or momentum of your top earning and growing dollar. So that's why you want to use this money to go out and do the work instead of just pulling it out of that savings account and continuing to go back down to that line of zero. Now, the beautiful thing about everything inside of this vehicle is it is all tax-free growth. So you will never pay any taxes on any of the growth or the gains in this vehicle. So if you earn $10,000 in interest that year, it is all your $10,000 of interest in your pocket. You don't owe Uncle Sam a dime. So with that, there's only two vehicles in America where you can get tax-free growth. And that's going to be a Roth IRA, and it's going to be cash value life insurance. And so within the cash value life insurance, we use the IRS tax code 7702. It is nothing fancy. It is nothing complex. When you hear about the wealthy making a lot of money in a certain year, but not always paying taxes on the earnings that they've made, this is just one of the loopholes that they use to be able to do this. And we say, hey, if it's good enough for them to have been using all this time, it's good enough for us to share with everyone, so that if anyone wants to take advantage of it, you can. And so that's why I'm here sharing this information with you today. So you will never pay any taxes on the growth or the gains inside this vehicle. It is all tax-free money growing. So also it is protected. It is more protected than money sitting in a bank account. So when you think about money that is sitting in your bank account today, it is protected by insurance. The FDIC, the Federal Deposit Insurance Corporation. So if the bank that your money's in right now were to collapse, the bank doesn't have to pay you a dime. They don't owe you anything. The insurance company has to pay your money. So the banks are putting their money in insurance. It's called BOLI, bank-owned life insurance. Corporations are putting their money in insurance. It's called COLI, corporate-owned life insurance. They're putting their money, wealthy put their money in insurance. So they're putting their money in cash value life insurance. We're putting our money in the bank. So if something happens, the insurance is paying you, not the bank, up to that $250,000 threshold. So I would never have more than $250,000 inside of a single financial institution. But when you have funds inside of these types of vehicles, it's all protected, not just up to $250,000, because it is insurance. So you can have millions upon millions of dollars in there. It doesn't matter. It is all protected. So also with funds inside of these vehicles, you don't ever have to worry about anyone else having visibility, access, or control over it. When you think about funds inside of your bank account right now, if the government saw fit, they could garnish every penny inside of that account, and you wouldn't have access to a dime of your own money. If the IRS got your name mixed up with someone else of the same name, they could freeze every penny inside of that bank account, and you wouldn't have access to a dime of your own money. So when you have funds inside of these vehicles, nothing is reported to the government. Nothing is reported to the IRS. So no one else would have access, visibility, or control over these vehicles but you, or the cash but you. So this is way safer than being inside of a bank. Also, you can never be sued for anything inside this vehicle. It is never allocated within a court of law. So when you think about everything else you can be sued for, your home, you can be sued for your house, you can be sued for your car, you could be sued for every penny inside of your bank account. It's all free grabs. But when you have money inside of these vehicles, nothing is ever allocated within a court of law. So even if someone sues you, or if there's child support or divorces, people having to give up 50% of everything, this is never allocated within that. So you always have something that you can fall back on that's not tied to anything dealing with the market or the government. Speaking of that, that's my favorite part about it. It is not tied to the market. So you can grow and earn money, but you can never lose anything in it. So this is the only vehicle in America where you can earn and make money and not lose it. So every other vehicle that you can think of, you can make where you can make money, you can also lose money. Even when you think about 401ks, IRAs, 403bs, 457s, people save in these vehicles their whole entire lives, hoping that when they get the age of 65, that they're going to be able to live off of this money. But what the government does not tell you is who your silent partner is in that vehicle. So before you hit that age of 65, at some point that market's going to take a hit. And when it does, you lose money. The average 401k was down over 20.1% just a few months ago. And it takes forever to just get back where you were before you can start profiting again. But by the time years go by and you get back to hopefully where you were, the market's taking another hit. So, and then not only is it tied to the market, where it can take a hit, and maybe you got $500,000 in there. Now it's down to $300,000 because the market took it. Now you can't touch a dime of that $300,000 until Uncle Sam gets his cut. And that's going to be dependent upon which tax bracket you're in. Some of our clients in a 30% tax bracket, 40% tax bracket. We've had clients in a 50% tax bracket. So now that 300 you got left, now that's cut into a fraction. So people think they have these numbers and you truly don't, because the government doesn't explain to you what's true, who this vehicle is truly favoring. So it's just like having a silent partner. So if I came to you today and I said, hey, or if you had a business idea, if you said, I have a business idea, I want to start this business. And I said, hey, I want to be your silent partner in the business. This sounds great, but I'm not going to contribute any money. I'm going to let you do all of the work. I'm just going to sit back. And then in about 20 years or whenever I feel like it, I'm going to come tell you when and how much I'm just going to take out of that business. Would you do that business deal with me? No, but we do it every day when we open up 401ks and IRAs and 403bs. We're taking that deal with the government. That's our silent partner in those deals. Americans are doing it people are doing it every single day. And so we are here to say there are better ways to be able to do this, where you can have these funds in a vehicle where you don't ever have to worry about paying taxes on that money. So if you've got that same $500,000 in there, it's all your $500,000, not just a fraction of it where you're left with maybe $200,000 of it because of the market and the government. So in these vehicles, there could be a stock market crash. There could be a real estate market crash. There could be world war, whatever going on. There could be a recession with a bread line down the street, and your money's still going to be protected, safe, and growing for you. And never go down. It's always growing and working and going up, up, up. That's the only direction it can go. And so we ask, so who's using these vehicles? A lot of people, a lot of communities are using these vehicles that don't look like us. So when you think about U.S. presidents use it, I already said BOLI, bank-owned life insurance, corporate-owned life insurance. The U.S. presidents use these vehicles. When you think of, Walt Disney, this is how old it is. Insurance is not new. It's been around over 200 years. It's hundreds of years old. Walt Disney had a vision of starting a business, and he went to the bank to get a loan. And when he went to the bank to get that loan, he said, I have this idea. I want a park. It's going to have a mouse running around with rides. And the bank was like, this didn't exist back then. So they were like, this will never work. This is not going to work. But in other communities that don't look like us, when they're babies, how, traditionally you do certain things as tradition, they put policies on the babies as soon as those babies are born. They just do it automatically. So he was able, even though he got denied by the bank, he was able to go into his cash value life insurance and pull that money out and use that to start his dream. And that is why Disney World exists today, is because of cash value life insurance. McDonald's was, they were not started by cash value life insurance. They got a bank loan, but the original business of the Ray Kroc brothers, it was like a regular restaurant where you sit down and it's like china glass plates, and it was a normal restaurant. Well, it sucked, and the business started doing horrible, and they were going to have to close. Well, they had this revamp idea where they thought, well, maybe if we did fast burgers and wrapped it in paper and, had a window that we served it out of and all this thing. So they went back to the bank to get a loan so that they could revamp, because the business was really failing. Well, the bank said, no, we've already given you money. You can't even pay that back. We're not giving you more money. Well, guess what they already had was cash value life insurance. They were able to go into the cash value life insurance, use that money to restart the revamp, remarketing, everything they put that money in to do. And that is why we have McDonald's on every corner today, is because of cash value life insurance. O.J. Simpson came from a normal family where he didn't know anything about this, but he got rich playing football, right? But he married into a very wealthy family. So what did he do? He started finding out, well, where are these people putting their money? So he started doing what they were doing, putting his money where they were putting their money. Well, we know how the story ended there. Well, he won the case, but the family was so upset that they did this civil suit on him. Well, the family won the civil lawsuit. They took the house, they took everything. They sued him for every penny. They had all his stuff out for auction. Even the Heisman Trophy had to go. He didn't even own that anymore. Everything had to go. They had all his stuff out on the news. They took every penny out of his bank account, but he had cash value life insurance that he had started putting his money in from watching them. And you can't be sued for cash value life insurance. So he moved to Vegas and was living his best life, still a multimillionaire to this day, getting millions of dollars off of cash value life insurance right now is how he's living right now. So even though they took his house, they took his bank account, they took everything from him, they couldn't take that. So he's still a millionaire living his best life right now in Vegas, getting millions of dollars every year off of cash value life insurance. So that is, just to show you like the importance of it and how it's here, but it's not really talked about. But putting it there really, really, really solidifies that financial house. Because when you think about your financial structure, it's just like a house. So when you build a house, one of the first things you build on that house is the foundation, right? If you want that house to be able to stand strong and stand firm, it has to have a solid foundation. And cash value life insurance is that foundation, because no matter when taxes hit, when inflation hits, you have something that's combating that battle of inflation, because as inflation's going up, your money's going up. It's tax-free growth. So you're protected from taxes. You're protected from risk, because you're not using your money out of your bank account to do risk. You're using money out of this account. Other people's money is taking the risk, not yours. So you're protected from all of the storms and the things that happen just from having this one thing in place, and having it as a part of that asset portfolio, that retirement portfolio, so that no matter what else is happening in the world and whatever else is happening with our markets going crazy, you have something that can bridge that gap. Whenever something happens where you can't be affected by it, and you still have a good solid financial foundation no matter what else is happening. So that is just a little bit about being your own bank and paying yourself first and starting these vehicles. So I am grateful to be able to share that with you. I don't know if anyone has questions, but I have my link that I am happy to put into the chat. If anyone would like to schedule, a session, maybe, 15, 20 minutes to hear more, or have more in-depth questions, or would like to learn how to get started, feel free to just book time on my calendar. And I am so happy to sit with each and every one of you to see about putting something together. And don't feel like you have to be rich to get started or anything of the sort. It is not that way. This is tailored to fit you. We have people doing millions of dollars a year into these vehicles. We have people doing a few $100s a month into these vehicles. So it does not matter where you start. We tailor it to fit you and find the best fit for you and structure it around you. So getting started is truly, truly, truly the key. So I just, and also it's great when I didn't speak on the getting out of debt. We help clients get out of debt including their mortgage, within 9 years or less using this vehicle. Because people tell you, you know, pay off the mortgage or pay extra on the mortgage to get the mortgage paid off. Well, don't do that. Pay yourself. Use this money to pay off the debt. So this way, when you're taking it out of your bank account to pay off the debt, now you're taking money out of your bank account to pay it to the bank. So now you're just paying it to the banks and making the bank rich by overpaying that money, when you can be putting those overpayments to yourself. So now you're growing capital and you're using this money to get out of debt, but you're not really spending it. You're just recycling it. So by the time you're getting out of debt in a fraction of the time by using this system, but also when you get out of debt, now you're out of debt, but you have all this capital to be able to go out and do all these other things with. So it is amazing for anyone that is in debt. Do not overpay to get out. Don't overpay on those credit cards. Do not overpay on those mortgages. Redirect that into yourself, because those are not truly assets. Homes are assets if a home is paying you passive income. A rental property can be an asset. The home you are living in is a liability. It is sucking up all your money. When the water heater goes out, the yard got to be cut, all these things, it's sucking up all your money. And so it's like, that is not the asset. Go get the assets that are bringing in that money and use that money to pay for liabilities. So that's how we teach to do. We had a client, I'll share this one example and then I will be done. I had a client, and she was spending $500 extra every month on her mortgage because she wanted to get it paid off in 15 years instead of 30. And that's what they told her, pay the mortgage off. So she's paying $500. I don't know if the mortgage was $1,000, she was paying $1,500 a month to get that mortgage paid down quicker. Well, what happened was she ended up getting laid off from her job. She lost her job. And with her losing her job, she ended up getting behind on like a credit card bill or two, something like that. So she knew she had to do something. She's like, well, I need to go refinance my home because all of my extra money, I've been putting it into this house. I've been putting all my extra money into paying this house down. That's where all my money is. So let me refinance and get some of my money back out of this house. Well, when she went to fill out the application, guess what? She was denied. She didn't have income, and her credit had gotten some dings on it from the being late on some payments. So that's not your house. That's the bank's house. So what happened? She ended up losing that house and all the money with it, where the opportunity cost, where if she would have gotten that same $500 every month and paid herself back, that $6,000 a year, if she would have been paying it back into herself, do you know how much that $6,000 a year could have made her in that same 15 years or 10 years or 8 years? She lost out over hundreds of thousands of dollars that she could have made off of that money. Had she just been redirected it into the right place, she would have had money to go into when she lost her job. Heck, she could have brought a whole new house if she wanted to with the money that she could have made off of that same money. But we're giving it to the banks, overpaying them money that they're not even asking for. Pay it to yourself. And that's just an example in a story that I had to share because it's so important. And we were able to help her get her new start on her feet. But it's important to learn these things. So once again, thank you so much for listening. If you have any questions, I am happy to answer them. And also, I'm going to place my link in if anyone would like to just place a one-on-one appointment and learning more on how to get started. Thank you so much.
Praise Allah. Thank you. We're going to allow Telegram land to ask their questions first, and then we'll allow the floor to ask their questions. So anybody in Telegram land, if you have questions, please unmute yourself and ask the question. Don't let everybody go at once now.
Okay. I got a question. How much does it take to get started?
Yes, that's a great question. So with it, because it is insurance, so it's not like, you can do any amount. There really is no minimum. There's no maximum, right? But we have to remember that it is a death benefit comes with it. So how we structure it, if we're just saying, hey, you have this, you have assets, right? I have a house, I have this, so God forbid something were to happen to me, this is how much credit I have that would be left, because credit doesn't go with us. So when we go, your family, somebody has to be dealing with all that credit that you're leaving, all that debt that you're leaving behind. So if you say I have this much debt or student loans and my house is this and my car is that, my funeral expenses is this, so I need this much death benefit, then we would say, okay, that's going to cost you this. But when we're structuring it for infinite banking is completely backwards. So what we do is we say, okay, we're going to get your age, your health, your risk assessment, and then we're going to say, how much can you comfortably save into this vehicle? And then we're going to go to the carrier and say, okay, this is my client. Here's their health, their age, risk assessment. This is how much they're looking to fund in. What is the smallest amount of death benefit that I can get for the maximum amount of cash value? So we're going to go small as possible because we don't want the death benefit to eat up that your cash. We want that cash to push over to start getting that growth. But we try to say, because it's banking and because a small portion does have to go into that death benefit, try not to go below $200, because if you fund in that $200 today, but God forbid something happens to you tomorrow, then that carrier has to pay out a substantial amount of tax-free money to your beneficiaries immediately. So because of that, a small portion does go there. The rest pushes over. So if you want something, substantial enough to push over to where you can look back and say, wow, I am glad I did this, we try to say don't go below, the $200 threshold, so you can have enough going into both places healthily inside of the vehicle. But it truly is structured around you. We try to say, hey, how much are you systematically saving into your savings account on a monthly basis? Maybe redirect a portion of that. How much are you overpaying on debt? Redirect a portion of that. How much maybe do you have miscellaneous money at the end of the month that's just hanging around? Maybe redirect a portion of that into those vehicles. So that's kind of ways we try to help find the cash to go into them. Great question.
Okay. Thank you for that. That's a
Absolutely.
great explanation.
That's a great question. Anybody have any more questions? Telegram land, please unmute yourself. Better action now. Don't be shy now.
Okay. Can I transfer the existing insurance that I already have to a cash value life insurance?
So it depends. That's a great question. So it depends on the type of insurance that you have. So if it's a term policy, then that wouldn't be transferable because a term policy it's not a permanent policy. But unless it's a term with return of premium that has cash value in it, then you can kind of do a 1035 exchange on that. Now, if you have a whole life policy or a universal life policy, then yes, you can. You can do a 1035 exchange and it can roll right over and you can kind of, swap into the new policy. Yes, you can do that.
A 1035 exchange. So do I go back to my insurance agents or do I do this on my own?
No, you can just work with me. If you contact me, you won't have to do anything. We would do everything during the application process. The carrier, your carrier and the new carrier would conversate through the application that we do together. They would just conversate and it would just transfer over and there wouldn't be anything they would have to do. But we would first want to kind of look at it and make sure that it needs to be, because we would want to look at your policy and say, okay, is your policy a good policy? Does your policy have cash value in it? Was it structured properly? If so, you may want to keep it and maybe add to it or modify things a little bit. But if it's a policy where this just isn't going to get you anywhere, then yes, I can work with you to get that transferred into a proper policy.
Thank you.
Absolutely.
These are great questions. I'm learning some myself. This is very important. Any more questions from the Telegram land? Okay, going once, twice, gone. Okay, I'm opening up the floor for any members here. If you have any questions for LaToya Jackson. I got some questions. Nobody else got none. Trust and believe. I'm taking notes myself. I heard this before, but it's always more. I'm learning every time.
I have a couple questions, actually. My first question would be, when can we begin to borrow against it?
Great question. Yes, so it depends. So there's two different types of vehicles that we use. So to talk about the vehicles, we use a whole life vehicle that we structure, and then we also use one of those IULs, Index Universal Life Policies, that we structure as well. On the whole life side, this one's going to be very set, very standard, very structured. But with this policy, even though it's a guaranteed interest, so they're saying guaranteeing you no matter what happens, we are guaranteeing you this money. So it's a more conservative growth on that side. But with that particular one, once you fund in your initial premium, you get access to your cash within 30 days. So almost immediate access. They used to do it right when you got approved, but they had to stop because people were getting approved. They were going in, taking money out immediately, but then their payments were not clearing the bank all the time. So then it became an accounting nightmare. So they just wait for that payment to clear the bank. Once your payment clears that bank, then yes, you get access to the cash, to your bank account, to your savings account. And so when they say up to 30 days, but it typically is not up to 30 days. It takes about maybe 2 weeks to clear the bank, and then you will get that access. That's on the whole life side where you get the immediate access, but more conservative growth. Then on the IUL side, this is more of that legacy, more of that generational wealth growth. You have more capacity for growth. It goes up to a very much higher percentage of growth that you can earn. You can do the dumps. It's not as set and standard and structured as whole life where everything stays the same. With this one, you can dump in $1,000 if you get a bonus at work, things like that. And with this vehicle, because it is more of a long-term longevity vehicle, you do have to fund that one for a period of 12 months. You're still growing and earning. But you have to wait until month 13 before you're actually able to start exercising and accessing that cash. So that's a great question. So it depends on the vehicle. Some people do both and put them together, start using that whole life immediately because they get that immediate access. They'll start doing the getting out of debt. They'll start doing the investing, and then they'll start dumping some of those profits from that investment over into that IUL, which is more of that longevity generation account. So you can pair them together as well.
Okay, and I heard you say continue deposits into the IUL. Can you not continue to make whole life deposits, or are you just making those payments?
Just the premiums. Yeah. So on either vehicle, there's very flexible ways that you can fund. So you on either vehicle, whole life or IUL, you can do a monthly premium, you can do an annual premium where you just do it once a year, or you can just do a single premium. We have a lot of clients that just do lump sums where they just throw it in there. Because when you think about money sitting in your savings account, like we talked about, like some clients may say, hey, I just got $20,000 just sitting there. And if you use it, then that $20,000 goes to $15,000 if you take $5,000 out. Well, in this vehicle, you can just dump that $20,000 in and you never pay anything into it. That $20,000 just grows. But if you go into access, maybe, $5,000, your $15,000, your 20 doesn't decrease to 15. That 20,000 is growing and working for you forever, even though you're using money to go and do other things. And then when it makes that profit, you put it back into the vehicle and it just continues to grow to 20,000, 30,000. So it doesn't go away like it does in your bank. So a lot of people just do those lump sums and just dump it in and don't fund anything else into it. So it's up to you how you choose to fund it. But yeah, they would be permanent policies. Some people fund in for 10 years and then they're done. They just pay the policy for 10 years and be done with it, or 15 years and be done with it. So it's a permanent policy, but you don't have to pay into it for life. It's up to you. One of them you can pay into and then it becomes a pension. Pensions are almost non-existent anymore. Most companies don't offer pensions. So with this one, once you get to a certain age, you can say, I don't want to pay anything else into it. It will turn into income and pay you a check every month or every year, whichever one you choose, for the rest of your life. If you end up being 120 years old, that check's still coming tax-free to your 120 years old. So there's so many different ways you can fund into them and get funding back for yourself.
Yeah, you answered a lot of my other questions I had too, so I think I only have one left. So essentially, to break it down in layman's terms, I could live off these policies and just turn all my bills into my monthly insurance policy.
So we would want to still put something in that bank account because you can't have money go directly into the vehicle. The money comes from your bank account into that vehicle because the thing is, taxes have to be paid on the seed, right? So that's the question. Would you rather pay taxes today on a small amount or pay taxes on that big amount that understands later? So we say, pay the taxes today because taxes are not going down. They're going up. Pay them now, put the money into the vehicle, and then it grows tax-free. So that same dollar that you just put in, instead of later on, you would be paying hundreds of thousands of dollars in taxes. Now you're making $100,000 plus in tax-free dollars back into your pocket. So pay the money, put it in this vehicle, and then you get the tax-free growth. But I would say put it in and then redirect a portion in. But later on in life, if you say, hey, this is the money that I want to use to cover all my bills, this is the money that I want to use to live off of, absolutely you
can. Thank you.
Absolutely.
Anybody have any more questions, Sister Ashley?
Hi, sister. I wanted to know, does age, just like car insurance, does it affect the premium, the rates?
Yes. So this is life insurance. It is insurance, and you are correct. All insurances work that way. So yes, what they're looking at, they are looking at your age, they're looking at your health, and they're looking at your risk assessment. So yeah, age does play one of the factors into it. So yes, you can be approved at whatever age, but your rate may be higher than someone that's, 15 or 18, or 21 getting started compared to someone that may be, 60. Yeah.
Yep. Thank you.
Absolutely.
So
Great
don't wait
question.
till you get too old.
The earlier, the
Anyone?
better. That's why some communities put them on the babies as soon, because that's the best way to do it. The baby is like that's the cheapest you're gonna get, and they make $1 million babies.
$1 million baby.
Peace. I definitely want to schedule a one-on-one with you, but I would like to have my mother present, so you give her some information.
Absolutely. So yeah, I'm going to put my calendar in here now. So if anyone wants to go on, that's my link. You can go on at any time and schedule an appointment for you and your mom. And I am so happy to sit with both of you so that she can ask questions and get a really good understanding of it. Absolutely.
Okay, thank you.
Yes.
Anybody have any more questions? I have a question. What's the annual return you get on your money?
Great question. So it depends on the vehicle. So again, on the whole life vehicle, this one is guaranteed. So because they're guaranteeing you that no matter what, they are going to give you this interest, it's a more conservative growth on that side. So on the whole life side, you're going to get a guaranteed 3% interest. And then you're also going to receive a 4% company shared annual dividends. So you'll have two crediting strategies tying into that cash value on the whole life side, and it is guaranteed, and those numbers will never change. And that is very more conservative. Now on the IUL side, this one has more capacity for growth. So in this one, you can earn anywhere from 1% to 10% inside of this vehicle.
10%, okay.
Absolutely.
And you get a yield. Okay, and a yield.
What was that?
One more question. So if I come with 20,000, 30,000, 40,000, do you report that to the IRS?
No, nothing is reported to the IRS inside of these vehicles. Now the thing is, when you deposit the 30,000 or wherever it's coming from, they have to pull it from a bank account. That's the only thing. So it wouldn't be able to be like cash going in. They have to. Well, you can send a check, but that's still coming from a bank account. So it would be an EFT, like a EFT or a check. So it would still come from the bank. But no, nothing from the insurance side is reported to the government or IRS at all.
Can I ask this question?
Yes,
so, like you said, it has to come out of a bank account. Could it come out of a business account?
Absolutely. These are amazing for businesses. I encourage all business owners to have a policy on that business. You have to have protection. Yes, it can be in the name of the business. It can be in the name of a trust. You can make the trust the beneficiary. But if you have a business, you get even more tax benefits, because once you make if you have a revenue generating business, once your business generates a certain amount of revenue, then you're able to do deferred compensation on your Schedule C when you file your taxes. And on that Schedule C as deferred compensation, now you're able to deduct all of those premiums that you funded into the policy. So now you're able to deduct that from your income. And everything that you put into that policy not everything, up until a certain amount, you can dump into that policy, deduct it from your income. So now you are not paying any taxes on the money. You're able to put money in tax-free. You're not paying any of the premiums because you wrote them all off and it reduced your taxable income. And then you're able to get tax-free growth and pull all that money out tax-free. So yes, businesses, please get them on your business. Great question.
Another question. So can I have a policy on my business and myself?
Absolutely, you should. Okay. Yeah, I would encourage anyone, if you have it on your business, also have one on you as well.
Any more questions? These are wonderful questions. Keep going.
Okay, I got one. I guess I am confused about how the lump sum works, because that was great. I didn't think about the lump sum. You said 20,000, 50,000. How does that work as far as payment?
Yeah, great.
You just pay it and you have the insurance, like you don't pay anything else, or you still monthly payments, or?
Great question. That is a little, I can totally see how that can be a little tricky or confusing to try to get in your head. So yeah, how that works is it's a lump sum. So as long as it's over $10,000, that's the minimum that you can do as a lump sum. As long as it's over 10,000, you can just throw it in there and you don't pay anything else into it. That money just grows that interest that we talked about, interest dividends. Now, the beauty of it is your money is in the account growing. The insurance company's money is who you're touching to go out and do the work. So you're not touching your own money. So if you, let's just say, sometimes when you're doing investments don't come back immediately, right? Sometimes it may take 5 or 6 years for that investment to do well. So you take the insurance company's money to go out and do it. Now, if the investment does well, maybe 5 or 6 years later, then 5 or 6 years later, when it does well, then you go ahead and put that money back in. But when you're putting it back in, you're not putting it back in at 20,000. That money's been growing for 5 or 6 years. So that now that 20,000 has grown to maybe 30,000, 40,000. So you've made an additional 10,000, 15, 30 inside of the vehicle as well as in the market. And then you've never lost a dollar. Your money now, 20,000 is still now $30,000, $40,000. So that's kind of how it's working. And no one cares if you pay it back or not, because it comes with a death benefit. They owe you money. So they know no matter what, they have to pay you at the end of the day. So they say whatever's not paid back in, that loan is due at death. So they say whatever's not paid back in when you pass away, if there's $20,000 that never paid back into the policy, then instead of your family getting a $100,000 death benefit, they get an $80,000 tax-free death benefit. So the payment is not due until death. So there's nothing reported to your credit. Nobody's calling your phone. No one cares if you pay that money back or not. I hope I answered your question.
I was trying to tell you, hey, out there, you got us with cold chills in here right now.
It's just education that so many people don't know about, so I'm happy to share it.
I love the way she explains it, because I've heard this several times, but no one never broke it down like she does.
You see why this is Marcus talking?
Yes, absolutely. I appreciate you.
Thank you so much. That makes
I got a couple of questions now. Now, can you borrow against the cash value and the death benefit without a credit check?
So no, it's your money. So this is a savings account. So what you do to get started is an application. So that's all we'll do. Once we get you, once we do a one-on-one with you, figure out what's going to be tailored for you and all that, the next step is just an application. And we do the application together. It goes into underwriting. So underwriting can take anywhere from 1 to 6 weeks. So there's they don't do a credit pull or credit check at that time. They basically have a data system. So they can kind of see, the medical database. They're kind of looking at, are there any DUIs and, speeding tickets? That's okay if you have a speeding ticket. But they're looking at like those kind of records. And then if there's any like bankruptcies or any big things kind of sitting out there. Once you're approved and your account is set up, well, before your account is set up, we actually sit with you and do a full policy review where we walk through that entire policy. You get a real good full understanding on it, ask all your questions. Once that's done, then that's when you're ready to set that savings account up. You're going to have a web portal, just like logging into your bank account. When you log in, you're going to see your death benefit. You're going to see your cash value. You're going to see how much interest you're being credited. You're going to be able to change payment dates, pay less, you can do all that stuff. It's just like logging into your bank account. Everything is right there at your fingertips. If you want your money and you have available, just like your bank account, when you look at your bank account, if you have an available balance, you can touch it. You don't have to do any credit checks or ask for permission. It's your money. If it's available, you touch as much of it as you want to, again and again and again, until your balance is zero. But your money's still going to be growing. The insurance company is saying, okay, that's collateral. You have this much of cash value, so we'll loan you this much. So your money's still doing this while your loan balance is doing this every time you're taking it out. So you can deplete it and say, I'm taking all the money out. But as the money's growing, this is still going to be growing as well. If it took 5 years, you're still able to borrow more because your money's still growing on this side. I hope that makes sense. But no, you don't have to do additional credit checks or anything like that. It is your money, your savings account.
Thank you for that. I was just showing them the app where you can track everything yourself.
Absolutely, yes. It's just like logging into your bank account. You have visibility to see, touch everything. And you don't have to ask permission for anything, just like when you log into your current banking system today. That's the beauty of it. Like a bank, you have to go in and fill out an application every time you want money.
Okay, one more question. Go ahead, sis.
Just like the other insurance policies, do you have to do like a health assessment?
Yes. So once it goes into underwriting, they're going to be taking a look at the medical database. So they're going to be kind of trying to, see if there is anything out there. You don't have to be perfectly healthy. They know they know people have things going on. So they're just looking at, are you taking care of it? So I have clients that have high blood pressure, but they just want to know, okay, you have high blood pressure, but are you taking medication for it? Is the medication keeping it under control? Okay, then you'll be approved. So they're looking at those things, yes, but they don't really care so much that there's a medical condition there. They just want to make sure if there is one that you are taking care of it, or you have the medication to keep the levels, normal and things of that such. And it's just that one time. And once you're approved, and nobody's looking at anything ever again.
If people get approved, they're dealing with something like cancer.
Yeah, so I have clients that have gotten approved. I actually recently just got a client that was approved. Now the thing with cancer, you can't currently have it at the time that you're applying. So you want to be in remission. And some carriers, you can be in remission 1 year, and then some of them may be 2 years. But they want to just see that you're in remission and haven't had any relapses. But yes, if you have had cancer, yes, you can still be approved. Great question.
I have a question. What if the policyholders ask you a question, actually these health questions, and then down the line when you pass away, they find out that you were telling the story? Does this affect your policy and your payments?
Good question. Be honest. Yes, be honest when you're filling out that application. You always want to make sure that you're answering everything accurately to the best of your ability, because they have something called a contestability period. The contestability period is 2 years. So within that 2-year time frame, if something happens to you in that first 2 years and they see where you said you were not a smoker, but you passed away of a heart condition, lung COPD due to smoking, then they don't have to pay that claim out if you pass away within the first 2 years because you lied on that application. That makes the contract null and void. Now, after the contestability period, after 2 years, it doesn't matter how you pass away, they have to pay it out. If you lied, it's okay after the 2 years if you get through the contestability period. But I would say be truthful, because you just never know. And if it's in that first 2 years, you don't want them to be able to contest that. But after 2 years, it doesn't matter. You could have lied on every question and they still got to pay it.
Okay, I got another question. How soon does the life insurance pay out? And can you also use it to arrange your funeral arrangements in advance?
That's great. Yeah, so it pays out. They process those claims immediately. So they pay out pretty quick once you report the claim. So someone you would contact me as the agent, someone in the family would contact me, or you can contact the carrier directly, get that claim filed. You should be able to have the payment sent now. It used to be a check, but now they can just send it direct deposit. So it could be within a week. Oh, and then yes. So you would want to, we encourage everyone, when you have these set up, it's good to get a will. It's good to get a trust. It's good to get something in writing for your arrangements. That way you can say, hey, this much of the money is allocated specifically for my services. You can do something like that to allocate that portion of it, or get with whoever the beneficiary is that you put on the policy. Make sure that they know, what your wishes are. That's why wills and trusts are so important.
Do you work in that lane with wills and trusts?
I don't do them specifically. I always say go with an estate attorney, because estate attorneys that's in your area, that's in your state, to get those set up. Now, we do have connections and relationships so that I can put you with someone when you're ready to get that set up. But I always say get with an estate attorney that is in your area. And if you move to a different state, go to an estate attorney in that new state and have them look at it to do any modifications, because every state is different. So what requirements and things that line up for one state, you move to a new state, that state has different laws where that trust may not be 100% in alignment. So certain things may not hold up. So you want to make sure if you move to a new state, have an estate attorney in that state take a look at it and just make the little tweaks and modifications so that it's in alignment with that new state.
That's why you need the status quo. That's part of our status quo. Great questions. Any more questions? Okay. Thank you, sis Latoya Jackson.
Thank you.
I think you need a round of applause for that one.
Thank you so much for having me.
Very informational. You did that. Thank you.
Thank you. I look forward to speaking with you. Oh.
Yep.
To left her information in the chat, so anybody who can schedule a consultation, please do not hesitate. Schedule that consultation with sis immediately. Immediately, you hear me? It's very important. Thank you for that. That was amazing. How y'all feel about that?
Good. Hey, wait, you're gonna give us our direct report as well.
It's in the report.
It's in the what? In chat.
And I the replay inside of the chat.
Okay. I'm not in there yet.
Put the link in the conversation group.
Okay.
Okay. Well, I'll share that. So we see right there, right, how important this really is, right? An insurance policy can handle so many areas. It covers so many areas. This is essential to funding your trust, your estate planning. It's very important. Also, you notice that you have to have certain areas cleaned up, like your credit, right? Even though they don't do a credit check, they still check for certain things, bankruptcy, child support, right? Things that might affect the policy. So that's why this goes hand in hand with credit, okay? There's no way around you working on your affairs. A lot of people want to skip over that and try to find ways. No, work on yourself. Handle this. It's not that hard, you know? But taking the first step, it's not going to be as hard as you thought it was. It's a baby step. Just take the little baby steps and you'll look up and you got credit good and you got something to put it into, right? So we don't have to worry about this inflation that's coming. This is going to help us with this cash reset, this currency reset. Your money's sitting in the bank right now. You're going to get robbed, right? They're going to deplete those bank accounts, shut them down. But guess what? You still got your own private bank. But they can't touch, garnish, sue you, levy. It's important to know. So what I'm presenting today is some education on credit. A lot of people come to me and they, on my credit score, it's like hearing a baby cry. It's like, okay, you're crying about something that's very childish. You understand what I'm saying to you? Your credit history, your credit report is what you should focus on. How is your accounts reporting? How are you treating? How are you doing business out here? Are you a man or woman of your word? Because that's what your credit score reflects. Your credit score reflects your accountability in business. How accountable are you? Okay? So I outlined the main things and I posted in the Telegram land, the things that a credit score is based upon. And you have to know this for order you to be a master at credit. You don't have to know all the credit laws. You don't have to study like Grand Sheik and know all the consumer laws. Don't. You just have to know the basics of credit. So for personal credit, they base it off FICO, even though that's going to change pretty soon. But FICO is a system that the banks are using at this point. All corporations and creditors are using FICO. They are switching to the Vantage with Credit Karma has, the Vantage score. But the Vantage score is not important. But the FICO system is important. So the system is broken down to these 5 categories, okay? So you have an 850 credit score, right? It starts from 300 to 850. That's only how many points? 550 points. That's how many total points you really have on the credit score. 550 points. It's not 850 points. It starts at 300 and ends at 850. So within this 550 points, they break that down in percentages, right? So your payment history is 35% of your total score. So 35% is almost half, right? So that means a late payment is the most important thing on your credit report. The most important thing is paying on time. If you miss one late payment, that's almost half 550 points. Think about that. That's like, what, 275? So you're looking at like a 200-point decrease from one late payment. The trick is, what I just tell people, put everything on auto pay. That's easy. It's on auto pay. You don't have to forget. And then set your auto pay 3 days before it's due, because it takes processing time. Sometimes, I heard somebody even tell me this, one of y'all was saying this, that how they hold your payments until the past due date, right? But guess what? If you're proactive, they can't really get out on you like that, because you have your auto pay set up 3 days in advance. So you must know your payment statement date. Okay, so you can call your credit company and say, look, when do y'all actually report this? What date do y'all report this to the credit bureau? It's not on the 1st with everybody. Sometimes it might be on the 21st, right? So if it's on the 21st, you need to have your payment in by 18th. This is the most important part, paying on time. So don't get into something you can't pay. Because I tell people, them 30 days come fast. And they want their money, right? Just like you get into a house and something you can't afford. In 30 days, what you gonna do? Yeah, you moved in, but now it's 30 days, you gotta pay that mortgage and that rent. So be proactive. Your payment history is just a late payment. You pay on time. Because it makes common sense too. It's like if I loan you some money, you say you're gonna pay me on the 1st, and here comes the 30th. You ain't paid my money. Guess what? You just lost credibility with me. Next time you need some money, I'm going to keep that in mind, that you don't pay on time, right? How many of our people borrow money in a friend, but when it's time to pay, they turn into an enemy to you. They want to curse you out. Oh, you want to ask for this little money. Okay, that's how they looking at it. It's really common sense when you're dealing with these banks. Now, there's a list right here. Once you master this, you go to any bank and get approved 100% for anything, guaranteed. Then now, the next most important factor in your credit history is your amount of accounts owed. How much do you owe out here? That's 30% of that 550. So just these two things amount to 65% of your score. That's over half of just how much you owe. So accounts owed. So say if you have somebody gave you 10K and you went and spent the whole 10K, that's not financially responsible, really. Because they're looking at you like, okay, you spent all your money in one place. You're not a great budgeter. You don't know how to budget your money. Put all your eggs in one basket. Now, if you're smart and you took that 10K and flipped it, right, that's totally different. Well, if you spend your whole 10K on bills, because first of all, you have to look at credit as a hustler. Don't look at it as a consumer. Don't look at it as a person who I'm going to use my credit to go pay off some bills. No, use your credit to flip. This is free money given to you. You're supposed to use other people's money. This is how you do it. So if you spend 10K of that, so it's called utilization. How much do you utilize of the credit that's given to you? So if you utilize all of it, then that's 30% your score is going to drop again. The key is to keep it under 30% budget. So if they give you, just for easy math, if they give you $1,000, 30% of that would be $300. You shouldn't go over. Now, if you want your score to increase, you don't want that to go over 10%. So if they give you $1,000, don't spend over 100, and your score will constantly increase. Now, at 30%, it won't increase, but it won't decrease. After 30%, it will start decreasing. 35%, 40%, 50%. So if somebody, like, for instance, if you want to get a 30% score increase, pay down your credit cards. Just that simple. You get a 30% increase just paying them down under 10%. What I always tell people too when it counts, it's better to get credit cards. People scared of credit cards. Credit cards are good because they are recurring credit. It's a difference between a loan and recurring credit. Recurring credit means that once I pay this credit card off, even though I paid down to under 10%, it's still my money sitting in there. I can use it again. So it's not a loss. It's not like, okay, I pay back a loan and I'm done with you. You know what I'm saying? You go about your way. No, a credit card sticks with you. So after you pay that $1,000 down, you got $1,000 to use again. You know what I'm saying? So you got to know that about credit cards. Also, the next thing is the length of credit. Okay, how long have you had your credit cards? A lot of people, new to credit, right? So you might only have a credit card for a year or two. So the trick is to have at least a 10-year history on your credit report. That's 15%. A lot of us don't got no 10% history. So they made a magic button for us called the authorized user, right? So this is where you have to be educated on trade lines, where it takes primary users and authorized users. See, trade lines help with both of these categories because you can get a trade line for 20-year history, and then it'll add that length of credit that you need for your credit report. So that will give you a 15% increase. The same thing with the accounts. If you say you got a high credit card authorized user, say it's like 50K, you might owe, say, 10K on your credit card, but you just got an authorized user for 50K. Now it shoots down your utilization. That puts you under the 10%. So sometimes you can come out cheaper just getting a trade line rather than you just trying to pay the whole credit card off. Because if you owe 10K, you're trying to get 10K under 10%. That's what? $9,000 you got to pay down. You can go get a trade line for $500 and push that down. So it's just manipulation, right? It's knowing how to manipulate this score. Then the next thing, number 4, is your new credit, right? So that would come in the form of increments. All right, so every time you apply for new credit, you're going to get an increase. That's 10% of your score. So increments are 10% of your score. So anytime I tell people, don't just go apply for something. Go down and talk to these people first. See what the requirements are before you just get denied, going and stuff blindly all the time. You can go, these loan officers, they love to talk to you because they want to give out the money. Banks aren't in business to have customers. They are business. So the customers, they want to give you money, actually. They don't want to deny you. But when you come in there with all this shot, you're going to get denied. You got a high utilization. Your payment history is 90%. You're going to get denied. Your length of credit is only 2-3 years, right? So before you go and apply for new credit, do your homework. So that's why I made what I call a trade line hack list. So with the trade line hack list, from my experience and all the credits I done had over the years, I actually put the requirements as needed for each credit line. So like if say, instance, Navy Federal, okay, I know Navy Federal is going to check your Equifax and Experian for sure, right? Okay, or the new bank, Truist Bank that just started, they're going to check your Equifax. This is important knowledge to have when you walk in there because you got 3 credit bureaus. What if all your bureaus are not bad? Say if you got one of them bad, but 2 of them good, right? So you might have one credit reporting agency like Equifax and Experian is 700. The TransUnion might be at 500. But if you have the knowledge of what they're going to check and what they check before, you can go in there with confidence with your chest poked out because you know you qualify. this is what the education does for you, right? The last thing is your credit portfolio, right? So your portfolio matters, like what type of credit lines that you have. You can't just have, I hear people when they begin, I get a secured credit card. Like, yeah, that's for your first, but you have to diversify your portfolio, right, to strengthen. It's 10% of your score. So what you want to do is have what they call installment loans. Installment loans mean you pay installments. Mortgage, rent, car loans. And these are installment loans are also loans you attach to collateral, piece of property, right? So like a credit card would not be considered collateral, but a car or house will because it's attached to something that's tangible, right? So you gotta have that to have a high credit portfolio. So this is more important for you to know when you're going into getting a trade line. What type of trade lines are you getting? Are you just getting a credit card trade line? They got things that you can buy other people's debt. You can take over other people's payments. You can transfer titles. Like somebody has the car right now, right? They can't afford their payments. They can transfer the title to you and go right on your credit history. Same thing with a mortgage. Somebody can transfer the mortgage to you. Or just like these debt collection companies do. You can go buy debt. They have debt for sale. It might be $30,000 owed on a house. You can't get the house, but you can buy the debt and it reports to your credit. Debt is credit. Debt is credit. It's the same thing. It's no because how much you owe somebody is how much credit you receive. So diversity your portfolio is 10%. So if you have these things, you will guaranteed be close to the 800s, if not an 850. But guess what's all you need? All you need is a 680 to get through most of these banks. That's why doing your homework is very crucial. Go ask them, what type of credit score do I need? Most banks only want a 680. 680, that's all they want, right? Now, the trick is what I teach people is business credit, okay? Business credit is very important with your personal credit because a lot of people here on the internet and things like that, oh, get the trade lines, the net 30s for your business. No, that's ancient. We don't do that no more. That's you put net 30s and waiting 2 years to build business credit, you're going to be waiting forever, right? We can get you business credit as soon as your personal credit is up to par. The same day, as long as you have your credit portfolio, your business portfolio intact, you're going to need all 8 of these things. Okay, and I put this in the Telegram group chat as well. So you're going to need all these things in order. I put these in order for a very good particular reason. I hear people starting their business, they go all the way to step 7 and 8, and they ain't did the first 6 steps. And now you shot yourself in the foot because you got to correct all these records. So if you want to have all your records to match up, you don't have to have net 30 accounts. But what you do have to have is an articles of incorporation. You have to register in a state, right? The trick, what I do is register in a state that doesn't charge for business taxes. There's plenty of states that does that. You don't have to register your LLC in a state that you domicile and live in. You live in, say, California, you don't have to register your LLC there, even though California this year is giving out free registration, though. But I wouldn't do that because California has an $800 fee, annual fee, just for registering your business. So I register my business in New Mexico. New Mexico is $50. One-time fee, not recurring. You don't have to send in annual fees for this, and you don't have to have business taxes on this. So if you made $100,000, they have no state tax for your business, right? And you be excluded from federal tax as well. This is very important because they're going to come tax you. You believe it or not, right? Sis spoke about the Schedule C, doing taxes and things like that. The Schedule C is very important to understand when you file your taxes. That's a different discussion. So your articles of incorporation is very important for the first thing to do. Along with that, you got to do what they call a registered agent. Okay? The registered agent in New Mexico is $35 a year. Okay, they receive all your correspondence, lawsuits, and anything you need. So total $85 it costs you just for your articles of incorporation. Okay, the next thing you need is a virtual address. You cannot use a home address for your business. A virtual address, I go to Anytime Mailbox. It's $10 a month. Okay, the reason why that's important, these things is going to be checked on your application when you go for business credit. Your application, you have to answer all these. And if you don't answer one of these questions on that application, you're going to get denied. No matter if you do got an 800 credit score, personally. You don't have these things set up, you're going to be denied. So your virtual address is, you can say $10 a month, right? 1-800 number. You can get a 1-800 number virtually, $5 a month. You need that for your business. A local phone number. So you have to have a local phone number for the state that you reside in, right? Or the state you're going to be doing business in, or telling the bank the state you're going to be doing business in. That's about $2 a month. You can get, most companies have a combination where you can get both those for like $5 a month. It's very inexpensive to get a 1-800 number. And another trick to the 1-800 number is you can get a virtual assistant. A lot of 1-800 numbers have a secretary who can answer the phone calls for you. You can give them a script. They can take down messages for you, things like that. So look and do your homework on these 1-800 numbers. You're going to need these things, right? Now, after you get the numbers, you want to have your 411 listing. You want to list your business just on Yellow Pages, and also you want to list it on Google. Google has a listing. You know how you search restaurant near me, right? So you want to have your business intact. So when they search the banks, the law officer go search and see if you're a legitimate business before they give you this money. They're going to do their homework on you. So you want you to pop up, right? You want to be listed as a business, and that's free. It's actually free. That's a free service. Don't cost you nothing to get listed. Free. Okay? Then you want to get a business email. Somebody in the Telegram land, please mute your phone. We can hear you out there in the Telegram land. I think that's Michael Lewis ill. I'm going to mute you, man. Okay. So business email is important to get. I use Gmail. It's about $5 a month. All right. You're going to use your business email. You cannot use your Gmail. You cannot use a Yahoo. You can't use a Proton. You have to have yourname.com and into your email. You have to move professional. Right? Now, this is where the mistake comes where people do first. They get the EIN number before they get any of these things. And then the bank will ask you for your EIN verification letter. That verification letter is important for you to get your loan and open up your bank account because all this information is going to be on here. You're going to have your address on there, the state you was incorporated. It's going to matter how they tax you with the IRS. All these things matter. So you want to make sure that before you go and get an EIN number that you have all these things listed. You won't have to redo anything. This EIN number is another free service. That's free. So you hear companies like LegalZoom and it's a couple other companies set up your corporations for you. This is all they're doing. This is your question to me, and I will open the question. Your EIN number is very important, right? But a lot of these companies tell you they set up your business. They're going to charge you $300 for what I'm telling you right now. So do you want to do it yourself or you want to pay somebody $300? Because I'd gladly take $300 if you want me to do these things for you. I'll take the $300 and do it for you. Trust and believe. But you can just do these things yourself. They're very easy. I even put a list with the links on there. You can just click the link. It's so easy, right? Then your bank account. Now, that's when it gets kind of tricky with your bank account because you want to open up certain bank accounts that one thing you want to make sure is that you don't have to have a maintenance fee in your bank account. Okay, that means that you have to have a certain amount sitting in that bank account or they're going to try to charge you. So like, say Bank of America, they charge you, if you don't have at least $100 in there, they charging you like $15 a month. Now, you might think that's nothing, But what if you're not doing business and making money in that account, right? So you will look up, and when you need that bank account to use to verify your business, they can close the account on you because they've been charging you a fee that you ain't even been paying attention to. So what I tell people is go like to credit unions, Navy Federal. Credit unions are the best. Not only when you open up a bank account with a credit union, you can borrow with this credit union without proof of income. That's the most important thing. Proof of income is W-2s, tax returns, pay stubs, right? A lot of y'all is what? Entrepreneurs, self-employed, like that, right? So credit unions favor the self-employed entrepreneurship because when you go in for a bank loan with Navy Federal, you can get 2 loans at one time. You can get a personal loan and a business loan at the same time. You can get a car in your business, you can get a car in your personal. You can get a credit card in the business and a credit card in your personal at the same time. And then you can go to 5 to 10 bank accounts and do that same thing. So that's why you need to have proper education on different bank accounts. I put bank accounts, but really want credit unions. Credit unions are hard to get into, but once you're in there, you don't have to build a relationship with them. You don't have to be in there for 10 months or 6 months. You can borrow in an account the same day. So say you got your credit hooked up, you got all these things aligned, then you go open your bank account. You can apply for loans that same day. We done got people loans like this. And my little cousin, she ain't know nothing about no credit. Trust and believe me. That little girl walked away with $30,000 a month. We helped other people. I helped myself plenty of times. Okay, so having proper knowledge, like what I tell people is that the banks is your customer. You go out to the job, you looking for a clientele. The banks is the best clientele you can have because they don't run out of money. They never gonna tell you, "Oh, I'm broke. I ain't got it today." Right? You ain't gotta sell no product to them. All you gotta do is be in alignment. That's it. That's it. They're your best clientele you can ever have. My mentor taught me this. He goes around bank to bank just scouting banks. Like, oh, they open up a new bank. Let me go in there and talk to them. Let me see what y'all require, right? Talk to these people. I promise this is your clientele. This is your money right now. You driving past banks every day. You don't know that's the money. You looking for the money outside entities and everywhere else. But guess what? All the money is at just accessible to you in the banks. So you have to gear your mind for that because, like, I hear a lot of business ideas, but who's going to fund that business idea, right? Because when you get in business, you're going to realize that, hey, you got good weeks, bad weeks dealing with customers, right? Sometimes you might make $5K in 1 week. The next week, you might not make a dime. You know what I mean? This is business. This is reality. A lot of people want to jump in business. You think, oh, I got the greatest business idea. Okay, get in business, put it to the test of reality. You're going to see, I have to have money for marketing. I have to have money for advertising. You have to have funds to run a business. It just don't run on its own. So I'm bringing you to a reality state of point from my experience. The banks is your best clientele. Start there when you want to start business. You want to start business, look at yourself. Look at my credit score. That's the business. I can fund my whole life, and then I can take, guess what? I can flip these things, and I can put it in a life insurance policy, right? Now, the trick to business credit, the main thing is that these things don't apply on the business side. That's the best thing about business credit. So once you approve for business credit, guess what? Your payment history don't apply for 35%. Your payment history is the most important thing on business credit, how you pay it back. But you on your credit, your personal credit, you don't get rewarded for paying back things early. That's another mistake people make. Let me hurry up and pay this off. No, guess what? You just hurt your personal credit because you shot down your length of credit time, right? You just closed this account by paying it off. Then you shot down a couple things on here. So the best thing to do is on personal credit is to pay it off slowly. That helps your score build. But on business, paying it off faster because they got a different. It's not FICO. It's what's the name of this one? Paydex. Yes, a Paydex score on here. So the Paydex works like this: the faster you pay it off, the more they increase your score. So if they give you 10K in business credit, you pay it off under 30 days, you're going to get rewarded. Say you paid it off in 10 days, you're going to get rewarded. So what my mentor showed me is a thing called credit card manufacturing spending. That's how you can liquidate a credit card and pay it back with the same credit card, meaning like you can get a 10K business credit card, right? You can liquidate that through an ACH payment, say like a cash app or something like that, right? Just put you on that type of mind frame that goes to a separate account. Once you send that to that separate account, you can pay back from that separate account that business credit card, right? They're going to increase your score for that. You have to learn how to manipulate these things. And then they're going to give you more. So if they gave you 10K the first round, you can ask for a loan increase now. Now they can give you 20K. And this is one thing, right? Then the next thing on your business credit that they reward you on, they don't care about utilization, right? So your amount owed, right? That's 30% of your personal credit does not apply to your business credit. So if they give you a 10K credit card or a 20K credit card, you can max that boy out. It don't hurt you. On the business side, on the personal side, that just shot you in the foot. So what you want to do is you want to get your personal side to a certain point where you got all the credit cards you need and everything, but don't use them. You want to apply for the business side and max those out. Because, see, they're looking at it like this. A personal credit is for people to pay bills. Business is for hustlers. So they got a thing called reward points. When you max out your card, they tell you. So you want to do your homework, right? So if you get like, let's just say like an Amex card, right? American Express, you can only get in business. So you get an American Express card and they say after every 5,000, we'll give you 5,000 reward points. Those reward points turn to actual cash. So if they give you 5,000 reward points, it might have a cash value for $500. So you just made $500 just for spending your business credit. And then they might give you free perks like free flights, free restaurants, free shopping deals. You know what I'm saying? So a lot of people be using this to hustle. So they might get a free flight somewhere and sell it to somebody. Right? You might get a free flight to Miami. Somebody you know might need to go to Miami. Oh, sis, I got you. I can give you a discount on that. You was finna pay how much? Look it up. Oh, it's $1,000 flight. I give you $750 right now. They just say $250. You just made $750 for free, just for maxing out your car. And when you max it out, if you got the right mindset, what you can do is flip it. So you can take a credit card and go buy a bando. You can go buy a house. You can go buy a building with a credit card. And guess what? All you got to do is pay the minimum back. And then that's another trick, too. Like I said, if you're doing tour road. I know a lot of tour roads are a new trend. So tour road, the best way to do it is use your business credit. Because guess what? Instead of going to the dealership and saying, hey, let me get a car, right? Then you got to pay back the dealership. If you fail to pay back a payment, they can repossess that. But if you go to the bank and you get a loan for the car, they can't repossess it because you're going to the dealership with the money already. So when you get to the dealership, you can just buy it clean out. The bank paid for it. All you got to do is pay back the minimum payment on your bank. Now, a trick that I learned from him 500 mentorship is that Navy Federal, a lot of these credit unions, they got two sides to them. So you can do what they call a public dealer or a private dealership, right? So private dealership would be like me. I'm selling my car. I'm a private, they can consider a private dealer, right? So I'm saying I got a car in my Malibu, 15K. You want to buy it, right? Okay, you can go with the VIN number to your bank and say, look, this is the car I want to get for 15K from this private person. They would cut the check for it, right? So when they cut the check, you got $15,000 check. You can deposit that in the account that they gave it, put it in a name for, and then now you can flip that. You don't have to go buy the car. You can flip that car loan into a personal loan. This is a trick. So just imagine how many cars you can get like this. I'm just telling you one bank account, but imagine if you went to 5 banks at one time and did this. Now you got 5 cars. Now you can start a whole fleet on Turo. Now you're making money on the tour route, and guess what? All you got to do is pay them back their minimum payment. So this is key for finances. Like, you can hustle and bustle off this. You can take yourself in these jobs and these entrepreneurship, self-employment positions, and you can start to use credit. Credit is your best asset. You're never going to work enough to stock up what you need. I can guarantee you this. The system is not built for that. Because just like the sister was just mentioning, every time you get paid, guess what comes out? Taxes, bills, right? Your money is already accounted for before you even touch it. But the key to credit is you can get large amounts just based on this. They can give you 50K, 100K, just based off your credit score and your credit history. And then you can use that to flip. How long is it going to take you at that job or many customers to get 100K off these little broke customers? For real. Like, I think in reality, that's why I'm retiring. I'm not trying to do people credit. I'm doing it for members. You understand? I don't got time to be worrying about hundreds of people. I'm trying to explain this. They're not hearing me, right? But if you take heed to this, I guarantee you will be a master of credit. Once you just study these key elements, and then you can take yourself out of poverty. You can take yourself with, hey, I don't need no customers. I'm retiring. Because guess what? I got new things to reinvest in. Now you're looking at properties. Now you're going around rehab and reconstruction workers and things like that to rehab your property. Because you can take a property and get a loan on that. Man, there's so many loans you can get. I just help a brother take off a lien. He just put me on some things that a credit union, it's called the Department of Commerce credit union. They give you a pool loan. So if you got a house right now, you can go get a pool loan for 100K and don't build the pool. You can use that 100K and flip it. They just once the money hits your account, you do what you want, it's yours. As long as you pay them back. They don't care how you pay them back. They really don't. If you want to go about 100 pounds of weed, they don't care. As long as you pay them back. So the key is to knowing how to reinvest your money as well. So that's why I brought you the insurance, because that's the key way to invest your money right there. That grows interest. You can put 10, 20K in that, and it grows interest. You pay back your loan off your life insurance policy. It goes hand in hand with each other. You just have to sit back, really, and use your creative skills. Like, think about it. Make a plan for it. This is called a financial plan. The prophet had financial plans secured for us. He was big on that. With this, we got what? 2, 4, 6, 7 people in here. We all have good credit. Just think, this is $1 million, not $7 million right here. Who else do we need from that point? How much this land out of the cost is cheap. This land is not cost millions and hundreds of thousands of dollars. So this is why I put this in the manual. For us to really take this a part of the step taking, you taking your step. Your status correction, your credit correction is very important. As long I open the floor for any questions. I'll start in the Telegram land if you have any questions. And then I'll open the floor for the members here. If you have any questions in the Telegram land, please unmute yourselves. Unmute Michael Lewis. If anybody has any questions in the Telegram land, don't ask at once now. I'm going once, going twice, gone. Anybody on the floor have any questions?
I do.
Sister Ashley?
Mm-hmm. So, like how you said, you start with the EIN number first and the bank account, but you list the certain steps as far as the private address and all that. So, like with my business, should I just consider creating another business or is it possible to do like a change address? Because I have my articles, I have my virtual address.
Well, I didn't miss anything. The virtual address is
no,
what it is.
I didn't say, that was my question.
I didn't say you mixed it like
if she did it backwards, if you go out and get your EIN before you like the virtual address and all that stuff, can you go back and change?
Yeah, you can go back and change it.
Okay.
But that's what I addressed though. Never put anything in your personal address. I don't know if you heard me, but I did address that. Don't put anything in your personal address. That's why I put this last.
Yeah,
so if you already got a business set up, all you have to do is a simple application with the IRS and just do a change of address with it. It's simple. But yeah, that's easy for you to do.
So do you advise us to correct stuff we already have, or just like start fresh?
Right.
No, never start fresh. Because first of all, there's certain things that goes along with this as well. So, like for instance, your website. I did put the website on here, business website. So your business website is important. So your business website is has to have age on it as well. They can check how long your business website has been up. It's a simple app. They can just look it up. So your bank account, certain things you want to have some history on. So if you got your EIN number, it doesn't match this information, just go back and correct it. That's what I suggest, because depending on how it's set up though, because if you set up in the wrong state, you're incorporated in the wrong state, then you can dissolve that company and just re-register in a new state with the same name.
Where would you put the website on this?
Where the website will go right in here with the business email. So your business email, when you go before your business email, like number 5, I should say. So,
yes. Yeah. Because I got GoDaddy and they do the email.
Well, the first thing you want to do is buy your domain name too. So they have some cheap sites. You don't have to get it all in one place. I don't get mine. I go shop around for the cheapest deal for me. So I get my domain name for 99 cents through what's the company I forgot? I got it on the list though. But it's all on the list that I put in the group chat. So your domain name goes first, then the website, then the business email. So yeah, if it's not lined up like this, you got one or two choices. Redo it all or start over. You sure?
I guess my situation is I was at a business location for like 4.5 years. Like I had private suite. Now I just moved out the street and I'm trying to figure out I know now that I should get a virtual address. But my thing is, I heard like the bank look at the length of time you was at a location too. Does that affect your credit as well? Because I no longer can use that location to be there. So
they don't look at the length of time of the location.
Okay,
don't
that
really
don't
check
matter.
that. Yeah, they have to check that other than looking at your lease. So they don't ask for a lease.
From my understanding, I heard it was like basically like jumping around. Like you've been at this been your business location for a certain amount of time. Like you've been here now.
Well, the only way they can see that is like on your credit report. So if you have business credit set up already, what I always suggest is remove all old addresses.
Okay.
So you can challenge the old address and put the new address in. When they ask you on the application, I always put that I was at a location for at least 5 years.
Oh, okay.
They remove all the previous.
Okay.
Yeah. So they just asking you like, okay, how long have you been on the application? So put at least 5 years, and then on your credit report, remove all the old ones.
Okay. And you can do that on the business credit.
Yeah. Do now. Now it's the business credit website.
Yeah.
So like if you already been in business, you had an address already. It's better to have a physical address. Like here, we have a physical address I use right on my business. So I have to get a virtual.
But I no longer have that. But with the fact of me moving, now I wish I would have had a virtual because now I have the physical address I'm in now, I'm inside of another business. And Google is giving me a hard time with this. Like the past 3 months, they keep telling me, do a verification. We put the verification in, they still won't approve it. So that's
what you said, Google.
Yeah, like the Google listing. Yeah.
Okay.
Like when I had my tweet, if everything was cool. But like I said, that was 4 years there, but now I'm inside of another business.
Right.
They're giving me a hard time. So in my mind, I'm like, okay, just use the virtual.
Yeah, that might be a good option.
But the virtual can't be listed on the Google Business. You know what I'm saying? It can, but
the virtual address is a physical address as well.
But that's not where I actually do my business at the virtual.
Don't matter.
But it do, because if they looking up a business, say for instance, if you trying to get your hair done and right here where we at right now, and then your business
talking about for customers.
Yeah.
Your customer's bank account. So geared towards a new customer. You get what I'm saying?
You said my customer.
Banks are your new clientele.
Oh, yeah.
You know what I'm saying? So you need to be focused on this client, not those cheap. You know what I'm saying? This is the best client. So if they can't find right, that's gonna take your business to the next level. Right? Yeah, because if they just Google it, I get what you're saying. Like if they Google it, they can't find you. Type
right.
Or if you have a problem with verification, they ain't finding you anyway, so it don't even matter. You still get the customers.
They Google like hair salons near me, and then if it's located in Mexico or where, you know what I'm saying?
Yeah, I get
wherever it's gonna pop. But no, I get what you said. This makes more sense for the long haul. You know,
because who gonna give you the most money? Those customers.
Yeah, that's nickels and dimes.
Right. It ain't even worth trying to accommodate them. Accommodate the banks. Absolutely. They gonna reward you way better. They come find you.
Should I switch to virtual? If I open up numerous businesses, don't use the same virtual address, right?
No, you actually can. Yeah. Yes, you actually can. Yeah. Just like this location here. How many businesses in this building? Y'all use this. They don't know about I own all these businesses in here. Because guess what? Your corporation don't have an owner. Corporation, LLCs have no owners. So they don't, you can use the same address for multiple locations. Yeah. More questions? All right, so how much time we got left on the clock? Ooh, right on time. Okay, man, I'm doing good. This weekend party, man. Y'all be 4, 5 o'clock around here. Okay, so clean up the credit. The fastest way out to clean up the credit is doing a credit sweep, identity theft procedure. It's a lot for a person to grasp if you don't have like a foundation on consumer law. It seems scary and illegal, but it's not. I've been doing this for 5 years. I helped over 300 families. 300 families get into better positions financially. You know, so I think I know what I'm talking about just a little bit, right? So clean up your credit, and then once you clean it up, that's when these things come to play. Right? Once you get all the negative stuff off, now it's the real time to really know some stuff. Like people think, okay, I just got the negative stuff off my credit, I can go apply for something. Well, you can't. Work on your credit history now. Go open up your business, set it up the right way. Go ahead, sis. You got a question?
Yeah, what is your perspective on
bankruptcies is the worst thing I ever do. Ever. Never do a bankruptcy. Never in your life. Because the bankruptcy still reports your credit. And it takes 7 years to take off.
I was just thinking about that last night. Bankruptcy kind of sound like the same thing as discharging debt.
It's a discharge, but it's a public discharge where you're saying, like, I can't afford these things. I defaulted on these things, and I need help. And different types of bankruptcy, some of them you still got to pay off. Right? I think that's what the chapter 7, you still got to pay off the debt. So what's the point of the bankruptcy? In my eyes, it's like you could have called those companies yourself to negotiate that without the bankruptcy procedure. So bankruptcy is a huge no-no. If you want to just the quickest way to start a new credit profile, get CPN number. They are legal. Now, how you use it can be illegal, but CPNs are legal. What makes them illegal is you disclosing it. So if they ask you, are you using Social Security number, you have to tell them, no, this is a CPN number. And that keeps it legal, being honest. So it's called disclosure. You have to give them full disclosure on that. Because by us being a religious organization, we technically do not have to use Social Security numbers. Okay? You have a religious exemption to use Social Security numbers. So that's personal, whether you want to use a Social Security number or not. I do. I have a Social Security number, CPN number, and an EIN number. I use all three. Okay? And so that's the quickest way. I suggest just working on the credit, because even a bankruptcy procedure takes months. You know, just for waiting on the hearing on it or whatever. You know, I never went all the way through one, but it's a lengthy process. And it costs you so much, so long, that you're going to get denied for everything. Houses, mortgages, credit cards, and that's just for 7 years. And we help people take off bankruptcy, so but they're very hard to take off. Those are very difficult accounts.
Can you tell me, like you said, that the easiest way to fix your credit used to do a credit sweep and do identity theft? So what would that just be? Making an identity theft report? Like, what do you do about it? So
according to the Fair Credit Reporting Act 605B, Section 605B, it outlines all the things you need to send to the credit bureaus for a credit sweep. So you have to have a law enforcement report, a police report, but I use an FTC report. Okay, Federal Trade Commission is the law enforcement for the credit union. So you can do this right online. Take 5 minutes. You don't have to go to the police and fill out a false claim or nothing like that. You don't have to report somebody. You can do this in 5 minutes, print out the report, and then you make an identity theft affidavit. Get that notarized. You put them two things together with a piece of your copy of your ID, Social Security number, and you send it out to all 3 bureaus. Okay. And then in 4 days, they have to remove everything. If they don't remove it in 4 days, you give them a call. You say, hey, did you receive my packet I sent you? I need these things removed. They're going to ask you which accounts you need removed. You have to count your credit report in front of you, tell them the account number, and they're going to take it off. If they still don't take it off in 24 hours, I do an online dispute. And then this is all within 4 days, though. Okay? I'm not talking about 30 days, 6 months. I'm talking about within the first 30 days, you need to be aggressively at them. After 30 days, you're supposed to go take them to the court. And that's what I do. I take them to the courthouse. Because they have 30 days to comply with the law. They don't, see, the thing is, they tell you, like, okay, we got to verify these things, right? But the thing supposed to be already verified before you put on your credit. How you going to tell me you got to verify something that's already on my credit? It should have been verified. You should be just sending me evidence of what you already verified. And if they said it's verified, how did you verify it? That's the 611 method. So according to Fair Credit Reporting Act 611, you can actually put the method of verification, like what method, who did you talk to, their name, what is the accountant? I need to see the records. I need to see the contract. That all these things have to be validated. Because there's a difference between validation and verification. They have to be both of them, though. They have to validate it and verify it. And the validated means they're supposed to send you an authenticated copy of the contract. Supposed to be, you know how people authenticate this birth certificate, but they're supposed to send you an authenticated copy of your contract. Authenticated. And if they can't produce that, which I know after 5 years they cannot produce, I face every company because they do a thing called the 48-hour rule, securitization. So after 48 hours, every promissory note you sign, every time you promise to pay them, every agreement you made with them, they actually turn it to collateral and deposit that in the bank as a special deposit. They put this in the bank and they get a loan on that. So if you promise to pay these people, say your car was $10,000, $20,000, they get 10 times amount back. So 10 times 10 is 100K. So they got 100K off your $10,000 promise to pay. And they got a maturity date. They don't got to pay that off for 30 years. And they use you to pay it off. And then you heard what Sis said, they dump all that money into an insurance policy and gain interest and use that. It's a game. You know, so I call them out on their fraud. I just go straight for their jugular. From all the experience I have, I used to do the 609 letter, actually validate the death and go back and forth with them. I did that for years. I learned that they are fraud. They committing fraud at all banks. They all put coupons on the bottom of your bill. That means they participate in the fraud. That's human trafficking. Okay? They're taking your social security and your signature, your promise to pay, and they're collateralizing it. They turn that to collateral. They're putting that in the bank. So that's very important to know when you're challenging these people, because they're going to tell you like, oh, we verified it or whatever. But you have the law protects you in that. Like, okay, I need to know more detail on what you're doing, because you have a right to privacy. And your credit report is private. And you have the right to have what's reported on it. You know how the credit bureau started? They started from before the internet. They started from going to business, asking about your information and documenting that. So they went to every business. Say you got Walmart's business lined up. So I go to every business and I say, Walmart, can I have a list of all your customers? They give them a list of all their customers. They say, okay, how is this customer? Does this customer pay on time? This is how much this customer owes. How long has this customer been with you? And that's how they started their business. Of your information. That's why the Congress turned around and said, look, you have to give these people a free credit report once a year, because they create a monopoly. They selling you your own information. You got to pay for your own credit report. Right? You got to pay $20 a month for Experian. That's fraud. That's a monopoly of you. They selling you no service. They selling you no product. You are the product. So you have the right to privacy. That's a right, a birthright. Nobody can take it away. And the right to privacy means that you must consent to whatever's put on there. You don't consent to what's on there, you have the right to take it off, no matter if it's true or not. You have the right to take it off because it's your report, not theirs. So that's what I use as a leverage, just to understand. You know? That's why they can't touch me. I don't want to see your 850 credit team in the building. I'm trying to believe. We going hard. We ain't going to play with it. We're going for the juggler. We're going straight to CEOs and directors of the credit report agencies. They are liable. They know what's going on. You're liable for your agent. You know, it's like anywhere else. So, good question. Any question is a good question. I can now hold you. All right. So we're gonna close out. Wonderful weekend. I wish y'all could just all move out here like this.
We could get our credit together, get this money, so we all have our land. How much we need to put in for the land?
Well, they did not even that much, like 10K piece.
Oh, we got that in.
Come on, they get like 10 acres. Yeah, because you get loans.
Y'all ready? Everybody got a team. Everybody can go to the bank and get a team. Yeah, everybody get business. I know you can go to the bank and get a team. That's minimum. I'm minimum, yeah, but still, he said come to minimum. Yeah. So we're gonna put off air record to put together. Off the record for us. Oh, you got a meeting for next to the meet, so we're money.
Yeah, we're gonna make this sure.
I'm talking about to go invest in our land. I said off the record. We're going to have a meeting for us or come back in collectively. Put our 10K in.
We meet on this every week. This is what our weekly meetings is going to be covering.
Okay.
We're not diverting from this plan.
Oh, okay.
Because we're going to stay focused on this. This is the game plan.
Oh, okay.
You know what I'm saying?
You said we not thinking talking about the Sunday school.
Yeah, that's what I mean.
Look,
this is when we come to Sunday school cover.
But I'm talking about just us in the room. Not the world.
No, our Sunday school is not open for the world. It's only for members.
Oh, okay.
Yeah, you want to tell it? Yeah, it's not open for the world. This is a one-time class for the public. Yeah. Now they don't have more classes, but not our weekly classes for us.
Okay.
So we can continue to build.
Okay.
No, it's for
I don't get okay.
It's a game plan for us, and whoever want to join us. You know, it's like game.
I'm talking about us. Right. I know this was a public.
Yeah, this was this was a conference, right?
That's all been off the record.
Right. Yeah, nah. The public get a chance to hear what they heard or not, but hey, you gave them a chance. Like I did my part. I'm standing myself. Well, we take it with them. You know, that's not my house. I give my part, share everything I know. You know, I'm not holding back nothing for nobody. I'm just bringing these things I feel is important. And when I see other people capitalize on, I have mentors. I have real mentors. I just don't listen to brand sheets. I relate my mentors as well, but I have financial mentors that I call in and ask questions to. You know, so I'm just talking from inexperience. I'm watching people do the things I want to do and that we need to do. Right? And they tell me step by step, well, son, you gotta do this, gotta do that, gotta do that, right? It's very simple. It's not hard. I'm paying thousands of dollars to learn this stuff. Believe it or not, I'm giving it to you 5 minutes free. You know what I'm saying? It took me a lot of understanding, relearning, unlearning some things because was nobody just sitting here teaching me like for free. Like, oh, do this, do that. No, it doesn't exist, right? These type of class, minor credit sweeps and things like that, man, 3K, minimum. It's the mentorship. That might be a one-day class. You don't do that, hey, nobody gonna hold your hand, you know. But hey, I praise Allah for it because hey, man gotta do what you know. So yeah, because of the weather too, with the land you mentioned, you're not gonna go there at this point. It's too muddy. You know, liability issues. I was out there one time. I swear, I didn't even see the mud. I just went slide quick. You know how it is on that land, boy. It's a danger. You know, you might even think of it. Y'all got on pretty white dresses and stuff. You got short. Y'all gonna slip, fall, mud all over. You gotta ride home like that. You know what I'm saying? Not a car all stacked up. You gotta pay extra to get it detailed out. You know, and then that's a liability. The suit sis for that. So she like, nah, she couldn't put it. Cause me, I don't know. We could just watch from a distance and don't move, right? Just drive past it. Look at it, right? But yes, it's like, nah, that's just something I'm good. So we're gonna hold on that one. You know, I'm going to see fun and I really want to try to see that. I wish I could just pull a pallet and y'all just come sleep on the floor of my house, you know. Just gonna move in. We just feel like the Mexicans. You know. You know. You know what they do, man. Yep.
Making it work. Hey, paying $100 a month.
You separate house.
That's what you gotta do. You know, yeah, you do. I'm gonna tell y'all the real. Okay? And now it's June 1st. It's going to be the day they're going to announce the bank collapse. Okay, so what that means is that you're not going to have access to a lot of things you have access to. Because it might happen June 1st. I'm just saying, random message, right? Hopefully you got more time. But you don't have silver coins and you're not in food supply, get it now. You know, some water. You might have to shack up with each other. What's going to happen is they call it inflation. That's a word they use. Mm-hmm. Not inflation. I call it robbery. Mm-hmm. They're going to rob you. Anytime $10 ain't $10 no more. That's robbery. Anytime your $5 in gas don't do nothing like it used to, that means they stealing our energy. For a certain amount of money. Like I was making $17 an hour. That $17 can buy me, say, 5 gallons of gas. But when it's crash hit, that $17 might give me 1 gallon of gas. That's robbery. That's robbery. Because these pay rates ain't going up. Really. But you're working for the same amount, but you're getting less for your money. You're getting less for your energy. That's robbery. So that's what's coming on. This is going to be robbery. You're not going to be able to pay these bills. So if you don't know how to send in a coupon and discharge and respond to these people often, you're going to be in trouble. Guarantee you, you're going to be in trouble. You're not going to have, I don't care how much money you got in the bank. They're going to deplete that. You know what I'm saying? I'm just telling you the real. That's what's coming for our people. They're not ready for it. It's all financial. It's all finance. All you gotta do is trace the dollar. Why you think it's all about the finances? They're talking about BRICS, Brazil, Russia, India, China, Saudi Arabia, South Africa. That's BRICS. They are the new world power. See, we've been a world power, and we enjoy this privilege of having this world power and dominance over all these other nations, and we have lost that. We have lost that, and it comes domino effect. So corporations don't have to close down. Just picture COVID again. Want to have a real reality look on what we're facing? Picture COVID on the essential employees allowed to work. Other corporations, whole states shut down, riots, right? Grocery stores are closed. Man, Chicago, I went to Chicago during COVID. It was boarded up. It looked like just like ghost land out there. Man, it was scary to me, like, because I was in Texas. We didn't close down there. This is in Jackson, Texas as well. During COVID, our business has been closed. You know, it closed for like the first month, and then we reopened for the whole time period, and we have to wear no masks. And in Chicago, they still wearing masks. I go there now, they still wearing a mask. Some people doing it by choice, but it's lockdown force too. So this is going to be the best place to be. A lot of y'all states is, they're going to put some hard restrictions on y'all. Hard. You don't wish you was here in Houston. Like, man, I got to get back to Brett Sigmund out there. I'll sleep on the floor. Pull out the couch. I'm going to have it ready.
No, it's
That's why we're here. That's why I'm calling on all faith voice and preach on faithfulness, because I know destruction is here for you. This is my final call for unity. It's for destruction here. These phones might not work. Internet might not work. You're going to have to be present and ready. You're going to be forced to get ready. I take the prophecy very serious. Very serious. I don't play with them. They're serious to me. They came, this man came and warned us 100 years, and I'm watching it unfold. I don't just believe in psychics and things like that until they can prove it. People have proved to me they psychic. Like, he showed me, told me some stuff. Like, wow, how do you know that, right? So, take it serious. Take people around really serious, for sure. You don't leave with anything else. That's what this is all about. We claim sovereignty. Like we were speaking last night, it's not going to be a bad thing. It's actually going to be in our favor. But only in our favor, we have a proper education. These systems right here are going nowhere. Credit is going to outlive money. Outlives money. Because I can give you credit right now. I don't have to be a bank. I can give you 10 books in my books and say, sis, give me $50 for these books. Sell them for $100. You can double up. That's credit. And now you owe me, right? So debt is credit. That's the ancient way of doing things. We use bartering, we give each other credit. Okay, you need an acre of corn. Okay, come work on my house for 5 years. And then, listen, people start calling that slavery. Okay? That's not slavery, that's bartering, servitude, being of service. So, this is what we're turning. The horse and buggy days is coming back. You know why? Because these companies, Saudi Arabia, BRICS, they got the oil. Saudi Arabia got 40% of the world's oil. So that's why you see, like, state of California say 2035, gas cars are going to be illegal. All manufacturing companies cannot make gas cars after 2035. Why? Because they can't get the oil. So that's why your gas price is rising. Because they paying more to Saudi Arabia than these other places. All of these presidents that come in office all own stock in oil companies. All of them. George Bush was the biggest one. And that's why he went over to Afghanistan and did what they did over there until they beat war, because he pocketed the most. If you notice, gas prices ain't where they now since George Bush. That's why. They make huge profits, and also the medical companies, the insurance companies, and the prescription companies. You know, a doctor went to jail, a young doctor, he went to jail for price gouging. He made it was a pill that old folks needed. I thought someone said his name, but he went to jail for price gouging. He took a $5 pill that people needed for like cancer or something, and made it $250 per pill. Yeah. So they making huge profits. So you gotta help this young people as well. So making sure you know how to heal yourself. So it's not just finance is one area where we need to cover. It's different areas. You're gonna have to be healthy to survive this. You're not gonna be able to eat meat to survive this. You're gonna have to go without that meat. Unless you can get out here and kill you a deer now, or go fishing. You might be all right. We got some lobsters and crabs out there in the Atlantic Ocean out here. So you can do what you need, and we got deer out here. Get you a couple rifles. You know, this stuff with the Europeans, though. They told me, man, I don't go to no grocery store. You know, they laughed at me. I told them I go to the grocery store. They're like, what? Grocery store? I don't do that. So just be prepared. You know, this is not going to be the last of this. Everything going to be in our favor. And that's why we come here to focus on our nationality and community, because everything is going to be in our favor. You're going to have to stay patient, follow proper instructions, understand his instructions. You can't follow something you don't understand. So you got to understand why he came in the first place. Because he's seeing something that I see, and he's seeing something that's going to happen that a lot of us can't see. But don't even care, because a lot of people don't care to each other on doorstep. Okay? So, with that being said, we'll close out. I'll do another couple of hours. So, we're going to end with additional laws and emotion making clear. Is on? For the Moorish literature, and then for Moorish questionnaire. Questionnaire and additional laws for Moorish Americans by the Prophet Muhammad. 1. Land seats and governments and head of all temples, all businesses. He said something must be approved by the Prophet Muhammad before acting upon any members. Let it be finance, property, or any line of life that will cause the members to sacrifice finance, etc., that will cause to support any of any former officer that violates these laws is subject to be removed from his office under heavy restriction, etc., by the Prophet or the Grand Chief. Act 2. All members are to attend in their public use property. If a member is found standing around when the new period shall be fined 50 on the first case, and on the second, he will be fined $1, which is going to your emergency fund. If a member is working, his monthly dues must be paid. If he has money in the bank, he must subscribe. For as much he is able to avoid uplifting fund, because it takes finance to uplift the nation. Act 3. It is the lawful and divine duty of every good member, if he is able in finance, to aid in saving the nation. If he does not, he is an enemy to the cause of uplifting his own people, and justice must catch him. Let it be he or she, according to law, truth, freedom, and justice. As I have the power invested in my hands, and I will have to enforce the law in order to save the nation. Act 4. All members are up making a public speech must not use any section against the American flag, must speak radically against the church or any member of any organized group, if they are to teach law, truth, freedom, and justice. Act 5. All members must promptly attend their meetings and send their children to Sunday school. And the teacher must confirm himself to the questionnaire. Let every member let every member exercise his 5 senses who is able to do so, because out from Sunday school comes the daughters of the nation. Act 6. With us, all members must proclaim their nationality, and we are teaching our people their nationality and divine creed. They may know that they are part and parcel of the said government, and know they are not Negroes, colored folks, black people, or Ethiopians. Because these names were given slaves by slave holders in 1779 and lasted until 1865. During the time of slavery, but this is a new era in time now, and all men now must proclaim their free national name to be recognized by the government and get favored in the nations of the earth. This is the reason why Allah, the great God and universal ordained for the tribe of the property to give his people in this way. The Moorish Americans are the descendants of the ancient Moorites who inhabited the northwestern and southwestern shores of Africa. Act 7. All members must promptly attend their meetings and become part and parcel of all of the actions of the Moorish Science Temple of America. Members must pay dues and keep in line with all the sessions of the Moorish Science Temple of America. Then you are entitled to the name of faith. Husband, you must support your wife and children. Wife, you must obey your husband and take care of your children and look out the duties of your household. Sons and daughters must obey father and mother and be industrious and become a part of uplifting the fallen humanity. All Moorish Americans must keep their hearts and minds clear of love and advice to live in the world. This divine covenant is from your holy prophet, Romans God, lead and guide to this Father, God, our life. It is on. All rise and be the Lord's will. Here's touching. See that remember you did. Spread your wings, angels, strive to the left and choose to the right. Repeat after me, the Moorish heaven prayer. Allah, the Father universe, the Father love, truth, peace, freedom, and justice. Allah is my protector, my God, and my salvation, by night and by day, through his holy prophet, true Ali. Amen. Now use yourself as leaders in the turn. Let's run. If anybody has any donations, we will take on corrections. Also, Telegram when I put my cash out in there. With donations and collections is on.